basics, very basics of calendar. So better to go with the examples. Say these are the two monthly contracts. Say November month contract. Currently, it is at Ethereum is at 3,800. Suppose if I am buying this 3,800 call option at whatever the price, and same previous monthly contract 3,800, if I can sell for the month of October, so at the rate of say 207, so then this is known as your debit calendar spread. So debit calendar spread means for buying you are spending 354 or 355 US dollars, and we are spending 207. Some debit is happening from us, so it is known as your debit calendar. So now why we initiated that is very important. So why one should take a debit calendar? Why one should take a credit calendar? That is very important to understand. So this is a debit calendar. You found out that this is what we bought, this is what we sold. So now here the game of theta plays a very vital. Suppose if you see 31st October, same 3,800 call option. If I click here, it has a theta of 3,800 call option. That too 31st October, it is having a theta of 7.75. 7.75. So theta is always negative. So what does it mean? What is the meaning of this 7.74 or 75? This says every day this particular option 3,800 call option will have a decay, time value decay of $7.75. So if I same strike, if I go to November and 3,800 and click here, this is having a theta of 4.33. So this is also negative. So here, if you just go here, so what comes here? One is having a theta of, this one is having a theta of minus 7.75, and another is having minus 4.75. So this is negative for both the theta is always negative. So we sold, so negative minus negative into negative positive means if from the selling side we are gaining every day 7.75, and from buying side we are losing 4.75. So every day basis we will be gaining $3. That is what the assumption says. It is an assumption. It is mathematically it is saying $3 we can. But question comes whether we will gain this $3. Is there any condition where we will not able to gain this, or this $3 also can convert to be a loss? That may happen also. So here I told you about the debit calendar. So this $3 is, very carefully listen to this statement. This $3 gain will come to you as long as this asset, underlying asset, remains below 3,800. Means till the end of this month, so which is called your 31st of October 2025, if the underlying asset remains below 3,800, then this $3 is a possibility for you, or you can gain this $3. In case it is going above this 3,800 and going for 4,000, 4,200, 300, 400, like this way, then you have to land in loss. Why the loss will come? Because the loss will come from the side of delta. So the things what you have bought, it is having a November, which is having a delta of 0.55, and things which we have sold is having a 0.52. So though you have a 0.03 delta positive, but upside potential, if it is going up, you may land in the losses. So when you land in the losses, that is also very important. So here these basics is very important to understand. So here you have sold a call, bought a call, debit calendar. So we have also discussed that this $3 is our expected gain. However, this $3 of expected gain will keep on capitalizing, or this $3 every day will come to our pocket as long as this particular underlying asset, which is at 3,800 now, as long as this underlying asset remains in the range of 3,800 plus 207.9, the premium what we are selling it, means till 4,007 4007 or 4008, we may gain $3 every day basis. So that is the logic of this debit calendar. The moment it crosses that 4008, the delta accumulation will start here. So that this is having a higher time value. So this will add more delta. The buying side will add lesser delta. So we land in the problem, or our position will go into the losses. So this is the very fundamental of your calendars. So now question comes, if this is happening, then only we will be having a loss if it is moving up by 207.9. So how I can neutralize it? So if you can say that this is part, though they are giving a theoretical software also here to know what is the, so this is the same thing, it is telling 3,800 if the expiry happenings. So till 4,200, post 4,200 you can say that this is 4,200, it is negative again. So this corp it is giving, it is having a Greek is 0, all things is perfect. It is maximum profit, this much we will get. So that part, and some break-even picture also that is given by theoretical. These are the theoretical projections, not the practical projections. So the practical projections will be entirely different. So theoretically it is telling 4261 break even, no profit, no loss. 3435 also break even, no profit, no loss. In between this you will be having the profitability. That is what it is telling. So this I have taken one lot. So Ethereum one contract is 100 lots, means one Ethereum. If I go, so the profit loss will be slightly bigger. You can see here the profit and losses will be slightly bigger amount it will come. So this is what the debit part is saying. So how we should configure or make this strategy so that it should be profitable, because if it is going deep by 200 point, then we are landing in losses. So we want to earn from the theta, but we don't want to land in the losses. So in that case, what we should do, that is very important. So currently also what I have given in that group, that is also one kind of calendar. So what I have told here, it is a weekend. So weekend we are having, you can say here I am selling. So there is a, so 19th I am same I am buying. So little deeper if you go, it is very good. And 20th we are selling. 20th also same strike we are selling. So I have told here this is 57, so this is definitely 67 or 68, it will be that 10-point difference, and this is 20-point difference, so 68, 88, 89. So this is a perfect condition. So if I just put it 100, so then you can see that if you go for the analyzing this thing, it is telling that you have a maximum. So let me see, anywhere I made a mistake. So 200, this is not 100, this is 200. So if I go here, it is telling that I have a $48 of maximum profit, and minimum case also I am going to make some $10 profit here. So what is the range of my profitability? If it is going by 3,900 plus, also I am making some profit. If it is coming down 3,700, also I am making some profit. Expiry, so tomorrow expiry, I have to close it. So I cannot hold this trade beyond tomorrow. So how this profit has come? So I have taken 3,800. You can say middle strike we have bought 19th October we have bought. So what is its theta? 20. 18th October we sold. What is its theta? 36. So just note down the theta. So minus 37. So we sold. So we'll get $37. So now next series we are going same 3,800. So what is the theta? We'll be losing 20 minus 20. So then we are going for the next cycle, means 20th. So what will be the theta? So theta plays a big role here. So theta is 17. So here also 17. So we have sold, so we'll get 17 theta. So all in all, if you see, you can see here 37, 47. So here $3 is lacking here. So plus 32 theta we have formed it. So there is a probability that we can win this and we can make some profit out of this. This also is one form of the calendar. This is known as your distributed calendar strategy, wherein you are giving, so you are the shortest expiry and the mid expiry is having a lesser you can say debit, so that debit you are forming here, and these two, which is the, you can say, the longest expiry and the mid expiry is having a, so 20 point of credit, that also you are taking. So it is a mix of credit and a debit. So why this mix of credit and debit spend? Earlier what I have told, when we are going only with the two legs, debit calendar, say 3,800 debit calendar if we are forming. So you can say till 3857. So this one we are selling. So 57 you can add here. 57.7. So till 3858 will not have the losses. But once it crosses that, that will land in losses because of our delta mismatch, or delta will have some mismatch. So due to that, we may have some losses. To counter that, so these losses should not happen to us. So to counter that, if it is maintaining below, no issues. If it is going above 3858, then there is a issue that we may land in losses. So to counter that, we are forming a credit calendar here. Same strike, credit calendar here. So this credit calendar will take care of in case there is a huge rally happens beyond 3858. The credit calendar will take care of that. Though we will be losing money here, the debit calendar will lose the money, but credit calendar will compensate to certain extent and will be landing with a minimum projected profit of $10. However, if it is going to be consolidating at 3,800 level, if it is expiring, so by tomorrow, then we will be going to get some 45 to $47. So to make it very safe, we have seen that market has corrected a bit and other things. If we are going for 3,900 or 4,000 level also, it makes sense. It makes sense because you want that it should be the strike what you have chosen. Tomorrow that strike should remain as a out of money strike. So that is what your expectation is. So this is how you can form the, or you can control the debit calendars. So here, whenever we are dealing with the crypto and when we are dealing with the stock or options, what is the difference? So if I just open up the NSE site, you can get NSE India. So we can go for this. You can say nseindia.com. We will go to the option chain. So we can find out that what is the basic difference. Basic difference. Say same if I am going for the October end. So there is 28th October. Here too also we have a same. So these options are having a 31st October. So here they have given the IVs. So what is the IVs here? 74, 75%. But if you go for the Nifty, anywhere you are seeing that 74, 75 IV they are not showing that here, but whatever the values are here available also 9 to 11. So this is a low volatility instrument as compared to the crypto. So when this is a low volatility instrument as compared to crypto, you cannot do the same logic or same theology or the same thing you cannot apply in the crypto what you are applying in the Nifty, or whatever you are applying in the Nifty you cannot apply the same theory here or the same concept here. So the concept will change, the theory will change, the study will change. So this is a high volatility instrument. If you are seeing here 3700 and you are seeing 74 as a IV, annual IV. So projection, how you will calculate a projection? IV is 74, average 74, 73. So do not stick to that 1 or 2 point difference. So put side is 72, 74. Just ITM or just OTM is having 71 or 72 as the IV. So this 72 is the IV in percentage, means it is if I divide by square root of 365. So this is, you can say I am getting 3.76 per day. This is the per day volatility or IV on that. So if it is 3800, the base case I am telling, or strike I am telling. So if I just take that and divide by 100, so $143 expectation means 3800 plus 143. If it is coming to 3943, do not get surprised. 3800 minus 143. So this is a rough calculation I have given. 3656 also comes, do not get surprised. This is only one cycle. You have the tendency to go for 3 to 5 cycles. Means you can go beyond 3943 also, another $143, 4086. Again, you can go for by another $143. You can go to 4229 also. Same process, the fall can happen also. So one cycle fall happen, second cycle fall happen, third cycle fall also can happen like this. So these are the fact or truth in the crypto market. Crypto market, these things can happen. You cannot rule out that. So for that, what I used to tell, always keep your position limit in contract. So risk and manage maximum 20, 30, 40% you can utilize, not beyond that. So this is what risk and management. You should, your position should not cross this more than 40% of your risk, so that your positions will be safe always. That is very important. Any strategy you take, that is very important to monitor your risk level. If that risk level is 60, 70, 80% if you have taken, then you be sure overnight that trade can be closed by the exchange with that without informing you, because that will means that will trigger that risk side. Fine. So this is what you have understood. Debit calendar, how we are how we are means you can say controlling it through the credit calendar. So debit calendar can be controlled through the credit calendar. So debit calendar cannot be controlled through the any other process. So that is very important. Suppose credit calendar we don't want to take. So what will happen? Suppose if I don't want to take the credit calendar. So what are the things I can do so that this credit calendar part also I can avoid? Means these two positions here I am just having a separate position here, one complete separate position I am taking just to protect this one. So okay, it is for daily expiry, I can get it good because this is also weekends I can take, that is good thing. But if I do want to avoid this part, avoid the debit credit calendar part, what I, so in this case, I can go with the one step skip. So skip one step in between. So now you can say 24th October there is a weekly expiry, 31st October there is a monthly expiry, that is also weekly in nature. 7th November also there is a weekly expiry has been activated. So what happens here if I want to skip that? What should be my plan? So it is 70. So I'll be again going with the 3 cycle, means 4200 is my cycle. So what I do here, I'll just go for 24th October. Very carefully listen to this. So very carefully listen to this. I'll be selling 24th October's 4200 call option. So that too, if I take 100, and one skip means in between this 31st October, I will not do anything. I will go for the 7th November and I will go for this same, these things as a buy. This I can do. This I can do if it is feasible. The feasibility should be there. So what is the feasibility again? You can ask. So feasibility in the sense, though third cycle I have chosen, but what is the credit and debit scenario? I'm getting only credit of $37. My debit is $129. That is $100 I am paying. So this is not a feasible option. What should be the feasible option? 50%. So whatever the, so why it is not a feasible option? So that is also very important. Simply if I say 50% do not accept it. So go with its Greeks and debt. So here max profit this much and these are the things is coming 9200. More importantly the Greek. So Greek what we are managing here, it is 0.14 delta positive and theta is 1.61. We require 5 theta, minimum 5, then only it should be feasible. So we will be hunting for a strike, you can say, which can give us at least 50%. So these two strikes are ruled out. If I go for the 4000, say 4000 strike, I am buying here, I'm buying here, and same 4000 strike can I able to sell here. So 4000 strike, if I can sell here, how much it is giving? So I required near to 100, I am getting 84. So 10 $15 is, you can say, less is there. So I can accept it is not a very strict rule. So $15 deviation. So this may be my ideal part. So now go to the Greek part of this thing. So if I go for the Greek part of this part thing, you can say 110. However, profits are being stable and Greek is very important. My delta is reducing, theta coming to 4. What I said, I need a theta of $5 per day. That is the theta I need. So that theta I am getting. So when ideally I should close this, if it is maintained below 4000 till 24th, I have nothing to do. I'll be at a profit and I will book the profit. However, if before that it has gone to 4085, 4085 at any situation, because this is my sales price, then after the delta will create a havoc for me. At this time, I should close, book the profit and come. So this is how you should form the calendar spread. So what is the logic behind it? Theta should be $5. Delta try to keep it as 0. So absolute 0 sometimes you can get, sometimes you may not get. So this is slightly lesser than the 50%. So you are getting small amount of delta, you are getting theta near to 5. However, if this is exactly 50%, you can get a better bar. And this is for weekly. Weekly, it will be moderately successful. However, it gives a great success if it is being done with monthly options, 1 month skip in between. So I can show you here, these are the things I have given. So I have also booked one part here, which we have taken with 4,000 strike. With 4,000 strike, you can say we have taken some positions. You can see here, so 4,000 strikes. So 4,000 strikes. So this is being, they can say 4,000 strike. We have closed today, so 4,000 call put because it has gone to below 3,800. That is, we have closed it and made some profit. But for the Bitcoin, we are still on. So Bitcoin, what I did here, October I sold and I have bought the December, November month I have skipped in between. That is still there. So it is being taken another one trade which is being given with the your delta load. You can also, it is some options are there, that's why it is negative. However, it is still negative. So this combination for the Bitcoin is still negative. Time is there, it has not penetrated to that zone. Once it is zone is penetrated, delta will create havoc, so we need to close and book the profit, sorry, book the losses. However, that situation has not come, so we have to still wait for the better days to come. However, by October 31st, if Bitcoin is coming to 1,10,000 range, this will go to a great. So this is monthly. What is the logic here? October is being sold, December is being bought. In between 1 month skipped. So this skipping we are doing only for avoiding the third leg. So if you don't want to skip that, so next process is which I have told today, the things what we are having now. You can say I am just selling this. So in daily expiry, this opportunity comes every weekend. If you majority of cases, majority of times in the weekends you can get Saturday, Sunday. So Friday you initiate, Saturday or Sunday you should book the profit. Saturday you should book the profit around 5:30. So then, so 20th we are selling. So this is we are selling. So how many lots? So this is the value here. So 100 lots suppose we are selling. And 19th what we are doing? 19th 4,000. So 4,000 I am going slightly deep. I want it to be buy. So this is the buying side. Great difference is there. So 12, 25. So this is also, so 14, 15. So 200 quantity we have to buy. Then 18th. So this is very important. So this is also 4,000, 4,000 strike. If it is there, 4,000 strike, it is being sold, sold. So this is also how much? So see the difference. So 100. So $3.60 here, $3.60, and here you are getting almost $13. Means half. So here you are giving. So here you are giving $3, and you are getting how much here? So $13. $13 you are getting. So this is what the position is. So if you take it 69, and if you go back here, analyze the payoff. So maximum you can say projected profit $9. So $9 if it is coming to 4,000 zone, if it doesn't come slightly near to that, slightly your profit will increase. However, if it is maintained below current level, you are still making $2. $2 you will still make the profit here. So break-even points also it is showing. So everything you are getting there. So anybody has any query, you can ask me now. Wish you all advance happy Diwali and must learn this kind of things to get enormous success in the trade. Trade, always I used to say, trade is not an activity which can be done with emotion. Trade is an activity which should be done with proper study, compassion, and having a high grade of patience. High grade of patience. You may not get the result in the day one, you may not get the result in the first month, you may not get the result in the third month, but within third month plus 3 days your results will be entirely different. But that doesn't mean that before that you wipe out everything. You must know if you are losing, which angle the loss is coming. Is there any chances that that losses can be covered with some theta decay or anything? Because delta you do not know, price will go up or come down. It is known to the market and known to that instrument only. Which is known to you is only theta. You do not know what is the delta of this thing. You cannot say that whether Ethereum will go to 4,500 tomorrow or it can fall down to 3,000 tomorrow. This is not your domain. Whatever the calculation you do, it is a calculation. It is not a prediction. Calculations can hold, cannot hold us. But which will hold? Theta. So if you see this 3900 is having a theta of 20, I can say by tomorrow evening 5:30, this 20 is a definite loss component. Anybody sells that, that 20 is a definite profit for. So in this case, how we should plan that this 20 should come to our pocket? That is where the calendar spread comes into picture. So that planning is your trade. So that is what you need to do. So here if you see the trades what I have entered here, if you say that, so you didn't get $200, I'm happy with that. If I get $18 also, I'll be happy with that because this time maybe it has not come back. So if I just take some 10 attempts of $18 each and 2 attempts I succeeded to get $200, that itself is a big one. 52 weeks I have, 52 weeks I have weekends. 52 weekends I have. In 52 weekends, say 95% of weekends I did not get, I got only $18, which maybe 50% goes in my expenses. 95%. That 5% time if I get $200, that itself is a big money with $300 of deposit. So this is how you have to think on a trade. I'm just telling you, think on a trade, how you should think on it. So what we have, those who are in our close circle, what we have seen? We have been from the past 6 months, we have been sitting with some nifty strategy which is matured today. 6 months. But what is the pretty part of that? This is 6 months with absolute patience. We have been waiting. We are not making any losses this 6 months. We have not made any profit, not made any losses. So today or in the past 3 days, we made the profit. So that is how it should be there. If you do not do any earn any money for 6 months, it is okay. You should not lose. If that loss is anyway going to come back to you through some theta, I'll rather accept. But if you are anticipating delta and lost it, that is a gone case. You can't get it back. So this is how you should take that. So thank you very much. Thank you for your time. Once I upload this video, I'll share with you. Once again, happy Deepavali.